Hi, welcome back to our channel.
We are now in episode 4 of our Altomate podcast. As usual, I'm Akila.
I'm Sarah.
We are cross-sec team from Altomate. Just to recap from the previous episode, we talked about what it means to be a director and shareholders as well as their roles. If you guys missed that episode, you can find it here at the top right corner or in the descriptions below.
Alright, okay, so in this episode, we have a great discussion lined up that you don't want to miss. Alright, so in Altomate, we receive so many questions from clients about the incorporation and also other related issues. So we usually will explain it to them and help them to understand. Alright, okay, so since we have this podcast, we have picked some of the interesting frequently asked questions to share with you. So we suggest you to stay with us till the end of this podcast and enjoy the conversation we have prepared for you.
Yes. So before we start, this episode is brought to you by Altomate. We are a corporate service provider that provides services such as company incorporation and registration services, bookkeeping management, tax advisory, consultancy, as well as outsourcing payroll services. If you would like to know more, just click the link in the description below to discover our services and promotions. And then, okay, let's start our podcast.
Alright, okay. So Akila, registering as a member head, setting up a business account or applying for a financing facility, you will always come across to this term, which is a statutory document. So what exactly it is? That is our first topic for today because it is the most often asked question from our clients. So Akila, can you explain what is a statutory document?
Okay, let me explain. Statutory documents are a set of legal documents. They are commonly used to allow a company to affirm something to be true, to certify and satisfy some legal requirement or regulation when no other evidence is available. So let me share the list of statutory documents according to the Companies Act 2016. First, Section 14, Superform. It is an application for registration of a company, which will only be issued after your company incorporation. So if you need the latest information on the company, everything that changed to the company, you can obtain the company profile from My Data or the e-info portal. Then usually Section 14 will be sufficient supporting documents for other authorities. For example, if you want to apply for a loan with banks or financial service providers, this document states all basic information about the company, such as particulars of the application or the company, clarification, application details, directors, members or shareholders details, and information to agency, declaration sections, and lodger information, such as a company secretary. And then second, Section 15 is a notice of registration, which is a document that proves that the company is successfully incorporated. And third, Section 17 is the certificate of incorporation. This form will not be issued automatically after your company is incorporated. Business owners have to get this document from SSMI Data portal or SSME Info portal. Or usually the secretary will get it done for you. And then next, Section 58 and 236.3 is the appointment of first secretary form. Its purpose is to appoint the first company secretary. This has to be submitted to SSM only once within 30 days of the company incorporation. Then Section 58. It consists of the personal particulars of directors, managers, and secretaries. This form will be generated from the SSM system, micro-ID, every time there are any changes in managers, directors, or company secretaries of the company. After that, Section 78 is referred to as return of allotment of shares. This form is to be submitted to SSM every time there are any changes in shareholdings. It contains the particulars of the new shareholder along with the type of shares, shares class, share price, and number of shares being issued. And lastly, Section 51 is referred to as the Register of Members. This form is to be submitted to SSM by the company secretary every time there are changes to the shareholding to the company.
I see, okay. However, for Section 58 and Section 78, and also Section 51, right? If there is no changes of the particulars of managers, directors, or company secretaries, and also shareholdings of the shareholders, then the company will not have any of these documents, right?
Yes.
And also, all statutory documents may be a requirement for some organizations such as banks or financial service providers. Yeah.
Yes, and there you have it. Now you know what statutory documents are and their important functions. Let's move on to our next question. So, Sarah, what is an annual return?
All right, okay. Let me explain about the annual return. Okay, so annual return is a yearly report card for your company. It includes a basic information like what kind of business you run, where it is located, who is in charge in your company, and how much capital you have. It also lists your company's directors, managers, secretaries, auditors, shareholders, and also any registered financial obligations, if any. Even if nothing changes in your business over the year, you still need to submit this annual return. This is a requirement under Section 68 of the Companies Act 2016. So you must submit your annual return to the SSM within 30 days of your incorporation date each year.
So one more thing is directors must submit company annual return each year. If a director fails to submit the annual return or confirmation statement, SSM will impose penalties and compounds to the directors.
Yes, indeed. Okay lah. It is very crucial for the directors to submit the annual return, right?
Yes.
Alright, okay. So talking about the director, what happens to directors if the company goes bankrupt? Maybe you can explain more on this?
So this is also an often overlooked topic. We get it. We don't want to think about the negative things like that when we are starting a business, right? So, but as the saying goes, fail to prepare, prepare to fail. So it's better to prepare with the knowledge so that you know what to do and what not to do when it happens. So when your company is placed into liquidation, the directors cannot make decisions anymore. So if the directors had promised to pay the company's debt themselves, or if they let the company do business knowing it, they did not have enough money, they might have to pay for it personally. So if directors let the company keep going business while knowing it couldn't pay its debts or use the company's money wrongly, so the same applies if directors broke the law or made personal guarantees, they could be held responsible for the company's debts.
But don't worry, because here in Altomate, we will give you a solution for this, and you can contact our customer service for further detail.
Okay, absolutely. So Sarah, last but not least, this question will be interesting for shareholders and directors. So can shareholders and directors buy assets in real estate by using the company's name?
Yes, of course they can. In fact, it's better for them to buy the assets using the company's name. Okay, so for easy understanding, you imagine this. You're planning to buy a commercial business property for your bakery business. Okay, now if you buy this property under the company's name, let's say your company's name is a bakery bliss in Berhad, the bank is likely to give you a higher amount of loan. Why? Because Sdn Berhad is the most reliable corporate structure by the banks, hence it is easier to obtain loans from the bank since it holds the benefits of separate legal entity. Alright, so you think of Sdn Berhad as a person in the eyes of the law. Just like you, it can own a property and it can even sue or be sued. Okay, so let's say if you run a small partnership or a sole proprietorship, like right, let's say your name of the enterprise is John Sweet Trees Enterprise. In this case, all profits earned from your sole proprietorship and a partnership will be part of your personal income. Therefore, it doesn't have the benefits of a separate legal entity. An enterprise business structure is not as reliable as your Berhad. So, in the end, buying a property under a company name could be a smarter move for the owner of the company.
Okay, that is easy to understand. I think we have reached the end of this podcast. I hope all of this information will be useful for you.
Yes. So stay tuned for the next episode. Please comment, like, and subscribe to our channel. Thank you for watching. Bye bye.